one of the key theses that we have is really, I guess we're not the only ones, but I think it's valid, the value angle. So we're not negative necessarily on tech or new economy, but I do realize that things look relatively high. So the thesis is really when value, perhaps it really needs the vaccine, but I think that the chance really that all of the at least 5 trial or phase 3 trial drugs that we have or vaccines that we have, really all of them fail is quite low. So believe that may be needed for that value segment of the market to go up. And when that happens, and say tech maybe that doesn't necessarily get sold, I don't think so, but it could be the next leg in the market up. And I know the pushback that often comes, and also here is that's contentious. Now, I'm not sure it is contentious. I know other houses talk about it too, but the positioning is certainly not that way, so I think it can still happen.
We are positioning ourselves as we head up to the FOMC meeting next week. What are you expecting?
Very, very little. I think they have settled, given already a lot of guidance. Maybe they, in the QE program, go a little bit more on the longer end. That maybe one incremental news out of it, but doesn't look like it's shaping up to be a big event.
All right then. Hartmut, good morning. Tanveer joining in this conversation. Now, have you started rotating out of tech? If you're saying that tech is looking a bit stretched out, has the rotation started? And, in your note, you talk about sustainable investing. What is the thesis behind that?
Yeah, now sustainable really that spans all the asset classes. That's really very important, right? And that's also the beauty of it, I think, these days. So sustainable is no longer just single stocks. It's all of equities, it's private equities, it's bonds even. So you can really build portfolios with these SI building blocks, if you will. I think the beauty also of SI is on 2 levels, right, that are interesting for investors. One is risk. So really, we have evidence, right, from the past that if you look at some of the parameters, you can increase your likelihood to avoid some of the bombshells on the environmental disasters side, for example, and on the performance side. I think especially here for EM and also for Asia in particular, while we're seeing globally, we shouldn't take it for granted that SI necessarily outperforms. It may, but there's certainly no reason to believe it underperforms. But actually in the emerging regions, we have seen good evidence of outperformance. And it also goes to show that it's not only about environmental. Part of the reason why it has outperformed, or biggest part of the reason, is really the G, so the governance. Yeah? So that also matters. And here we still have big differences in EM. So it's a wide space, a very interesting space that makes the portfolio more durable. So we believe in SI.